This is the Used Car Dealer Podcast.
Hello, Zach here, and we have an awesome guest on the podcast today, Melinda Zabritski, who's a senior director at Experian and also an upcoming speaker at the NABD BHPH Super Forum. Melinda, thanks so much for joining me on the podcast today.
Thanks, Zach. Pleasure to be here.
So as an icebreaker, Melinda, talk about what brought you into the automotive credit space.
I've been here for so long, it takes me a while to remember how I actually got here. Been focused on auto credit for probably almost 20 years and consumer credit for 25, I think. I kind of fell into it from a product management standpoint as I was managing products that did a lot of credit trending, and then just started focusing on auto. And I think what most people find is once you start focusing on auto, it's really hard to leave.
Definitely. I feel the same exact way. So talk to me about the average loan amount growth. We've seen many like CNBC headlines. And what's that mean for the industry?
The loan amount growth has been remarkable over the past couple of years. If just looking the last 5 years, average used loan amount is up almost 50%. I mean, we went from 2017 used loan amounts under 20,000 to now, 28,000 or more. So it's something that has grown tremendously, and it's of course led to payments just hitting record highs. And it does lead a lot of questions to affordability. So that's been top of mind for most people is, what's that monthly payment going to be when you go to buy a car if you can find a used car to purchase?
Yeah, I've even seen headlines where, the average price of a new vehicle is in the mid 40,000 range, which is just shocking, like from a consumer standpoint. So that definitely pushes a lot of people towards the used car market. And another thing that's been kind of trending is credit union auto finance market share. Talk to me about what you're seeing from your lens at Experian.
Yeah, so we put together a quarterly presentation that focuses on the auto finance market. And in the Q2 presentation, noticed a huge growth in credit union market share. So started digging into that a little bit more to see what was happening. And we saw the credit union share grow for new, but especially for used vehicle financing. And a lot of it is due to the rate increases. So when you looked at over the last several months of, rates rising, the banks and the captives and a lot of the other lenders started raising their rates faster than what the credit unions have been doing. We're starting to see credit union rates increase, but they're still a couple hundred basis points lower than what banks are doing. And so that's led to some pretty remarkable growth in credit union share. Now, they're starting to increase their rates, but again, they're still a lot lower. And just in the past couple months, they've become the number one lender for used vehicle financing, over 30% share in the last couple months. So it's been pretty remarkable increase in their volume and then in their share. Again, also on new as well, but for used, largest lending group right now.
And why is it several basis points behind the credit unions? Or any thoughts on that?
Well, some of it is the cost of funds. They're a different regulatory environment. Cost of funds can be a little bit different as well. So that certainly leads to some of those rate differences. We're starting to see the increased rates now with the credit unions as well. But like I said, banks, 7% or so, credit unions still in the 5% range.
Interesting. And talk about prime consumers. Are they opting in for used cars with the skyrocketing, price of new vehicles and increasing price just to borrow money? Like, what are you seeing in the market?
Well, I started noticing probably about 5 or 6 years ago that prime consumers had increasingly shifted into used vehicle financing. That's something that we saw for several years, more super prime consumers, moving into used. Part of that was, looking for more affordable options. And with COVID and especially the kind of that peak of 2020 Q2, and a lot of the dealers had to close, we did see captives come out with some really strong incentives, and it pulled prime consumers back into new vehicles. Now, of course, a lot of those incentives are going away. And as we start to see more and more, dealer markups on new vehicle financing, and again, those loan amounts over $40,000, we're starting to see those prime consumers move back into used. So, and not only is it just late model used, but also adding some older model year vehicles, whether it's, buying a car for, for a family member or such. But those prime consumers looking again at used vehicles. And part of that, again, that monthly payment, a couple $100 less for a used vehicle than a new these days.
And let's double click into that. Talk about the average loan terms growing and what's that mean for the industry?
Well, I think that goes hand in hand with that very dramatic increase in loan amounts. Again, if we're looking at 50% increase in average used loan amount, payment goes up considerably. But what's the one trigger that dealers have to try to keep that payment low is term. And lenders are increasingly offering those longer term loans for late model used vehicles, and of course on new. So we've seen in the used vehicle space, for example, average loan terms back in 5-6 years ago would be on the low 60-month side, maybe in the upper 58 months, 59 months. And now we're seeing those used loan terms coming in almost at 69 months, which isn't much different than a new car. So those terms have grown quite a bit. And again, trying to keep that payment a little bit lower.
So I have a futures question for you. What new trends, what changes do you see over the next 5 to 10 years coming to the auto credit side of the industry if you had a magic ball?
Well, I think we've seen a lot of advancement just with, COVID changed the way that we purchase and the way that consumers are looking to buy cars as well as finance cars. So I think a lot of the trends that we've seen most recently around, digital retail, more of the transaction moving online. There's been such an increase in visibility into, every step of the process. That transparency of the financing has become something that consumers are looking for. So I think we'll increasingly see things more things go online. Lenders offering consumers more options for financing, whether it's direct or still in the traditional indirect channel. So I think we're just going to continue to see more things move online and make more of that transaction easier to initiate, complete on your phone. And instead of spending hours with the dealer on financing, you're essentially just wrapping up the deal and picking up those keys.
So you have a speaking engagement upcoming at the NABD Super Forum. And what is it focused on, and why should buy here, pay here dealers attend this session?
So this is a session that is a roundtable. It's a focus on the auto economy, and I'm going to be joined with Tom Contos from Car Auction Services, Mark Strand from Cox Automotive. So it's a great opportunity to have a very well-rounded discussion around auctions and values and overall economic conditions, as well as just the pure what are we seeing from consumer credit and consumer financing. And the focus, of course, will very much be on deep subprime and subprime dealers. So great opportunity for folks to have access to these three types of data sources all coming together to talk about what we're seeing in the auto economy overall. So I think it's going to be a great, well-rounded session and highly recommend folks join us for it.
And lastly, is there anything exciting you want to announce or plug about Experian?
There's so much going on at Experian. But as it relates to a lot of this type of information, I mentioned, I do this quarterly presentation and I have several colleagues that also focus on many other aspects of the market. And a lot of these presentations are very much focused on, national trends. However, there are a lot of resources that dealers and anyone interested in the industry can use this information to dig down into their very specific markets, look at things from more of a micro aspect instead of necessarily always macro. So encourage folks, if they're interested in learning more, check out our website, reach out and see what kind of data insights you can obtain that's really focused on your specific space.
And Melinda, we'll definitely include some of that in the show notes. And thanks so much for joining us on the podcast today.
Great. Thank you. Pleasure to be here.